When it comes to opening financial accounts, you may wonder whether you should go with a bank or a credit union. In terms of convenience, there are fewer differences between the two these days, especially if the credit union you are considering offers strong online services and is a member of a co-op that gives you access to branches and ATMs all over the country. In today's video, we will talk about how to choose between credit unions and banks, and which one will be best suited for you. Let's get into it. When it comes to opening financial accounts, you may wonder whether you should deal with a bank or a credit union. In terms of convenience, there are less distinctions between the two these days, especially if the credit union you're considering offers strong online services and is a member of a cooperative that gives you access to branches and ATMs all over the country. Banks and credit unions both provide federal government-backed insurance to protect your money. Consider what matters to you the most as you research banks and credit unions. For example, a large number of ATMs, or the lowest checking account costs. Banks. Let's compare the two, starting with banks. Ownership and membership. Banks are for-profit institutions that are owned by investors and must earn a profit for their shareholders. Anyone, including individuals and banks, is entitled to create a bank account. In contrast to a credit union which has a membership, customers have no vote or voice in how a bank is operated. At a bank, you are a customer. At a credit union, you are a member. Product offerings. Banks provide both personal and business banking services, such as business credit cards and loans. Individual retirement accounts, IRAs, certificates of deposit, and money marketing accounts are examples of investment and savings vehicles offered by banks. Interest rates. It is usually a good idea to check both your local banks and credit unions when seeking a loan of any kind. Although internet banks may provide lower rates than brick-and-mortar organizations with an online presence, credit unions often outperform banks in this area. Fees. Banks have more and higher fees than credit unions because they must earn money for their stockholders. Banks' free checking accounts generally come with conditions, such as minimum account balances or other account type restrictions, like mortgages or credit cards. The fees for mistakes like failed checks and overdraft are also higher, especially if you don't qualify for a premium account. When looking at banking costs, it's vital to compare both online and brick-and-mortar companies. Online services and technology. Large banks have more money to spend on technology than credit unions, and as a result, they are recognized for providing technological services much faster. Banks are anticipated to have considerably more advanced mobile banking services. If technology and online banking are important to you, establish a list of services you must have and request a demonstration before opening an account with a bank or a credit union. Credit unions. Now let's talk about credit unions. Ownership and membership. Credit unions are nonprofit and member-owned financial institutions with 120 million members, according to the Credit Union National Association. Credit unions do not need to earn a profit for its members, but banks must make a profit for their stockholders. Instead, they want to keep their costs low, making their savings rates as high as possible, and maintaining their lending interest rates as low as feasible. Credit unions are required to confine its consumer base to a field of membership. A firm where people work, a school or place of worship, a geographic location, or a membership in an organization are all examples of this. Credit unions around the country are coming up with new ways to expand their membership base. For example, Connexus offers memberships through its organization, which costs $5 to join. Customers of banks do not have the opportunity to vote on a credit union policy or participate in decisions, but credit union members do. Product offerings. Credit unions, particularly in the commercial banking sector, tend to provide fewer goods than banks. Credit unions, which are generally much smaller than banks, typically provide fewer investment options such as checking and savings accounts, as well as credit cards. Interest rates. Credit unions, in many situations, provide the lowest interest rates on loans, such as auto loans and mortgages. In terms of interest rates on savings products, credit unions are likely to provide greater rates than banks. The National Credit Union Administration analyzes interest rates on savings deposits and loans across banks and credit unions on a regular basis. Using data from S&P Global Market Intelligence, credit unions offered greater interest rates on CDs, money markets, and savings accounts, as well as reduced interest rates on most house and vehicle loans, according to its third quarter table for 2020. Fees. Many credit unions provide checking accounts with no monthly service fees and no minimum balance requirements. Fees for banking mistakes, such as a bounced check, may be lower at a credit union than at a bank, depending on the credit union. Online services and technology. Unlike many local credit unions, national and worldwide banking organizations sometimes have enormous technological expenditures. National credit unions with digital banking alternatives, on the other hand, may be able to offer you with the majority of services you require. Make sure to inquire about your credit union's mobile banking technologies and to review their website for ease of use and offerings. Keep in mind, bank and credit union accounts are insured up to $250,000, so you don't have to worry about your money being secure. Key differences between banking and credit unions. Larger banks are more likely to provide poor customer service. Wells Fargo was fined $757 million in 2018 for creating illegal accounts and billing customers for excessive vehicle insurance and mortgage costs, among other things. While this specific bank was a terrible actor, many large banks are rigid in their customer service care since standards are not imposed locally. Rather, national boards of directors and executive leadership implement them. Credit unions are more flexible when it comes to customer requirements since they are focused on serving their members. Account owners, members of the credit union, have equal voting rights and can influence votes on customer service problems. Credit union membership is also smaller and more well-known among local branches, making it easier to form relationships with the branch managers and loan decision-makers. It may be easier to obtain the loan you require as a result of this. Of course, some banks make it a point to reach out to their customers, so you could get good personal service in a local bank office. Major banks usually have more locations where clients may get direct assistance. Credit unions are more likely to be found in smaller towns and cities with fewer branches. To compensate for this disadvantage, credit unions have created the Co-op Shared Branch Network, which now has over 5,600 locations nationwide. Connexus, for example, allows you to do an online branch search. Furthermore, it provides more than 54,000 surcharge-free ATMs countrywide through the Co-op or MoneyPass to give more competitive client service. Credit union pros. The first benefit in choosing a credit union is that low interest rates and high saving rates are available. Second, strong customer service. Lastly, customers may be able to sign up for low-cost or no-cost accounts and services. Credit union cons. Now let's talk about some not-so-desirable side of credit unions. First, there aren't many financial products. Second, it is inconvenient due to the lack of branches. Third, there could be no mobile banking. And lastly, potentially low-tech banking online. If any of these is too much of an inconvenience to you, let's look at some of the pros and cons of banks and see if you'd feel more comfortable using them instead. Bank pros. First of all, a comprehensive array of banking, lending, and retirement options are available. And lastly, with many locations, ATMs, and online and mobile banking technologies, larger banks provide convenience. Banking cons. When using banks, higher loan interest rates are a possibility. There is also a lesser emphasis on providing individualized customer care. And lastly, the majority of checking and saving accounts have hefty fees. Special considerations. Bank and credit union accounts are covered up to $250,000. The Federal Deposit Insurance Corporation, FDIC, insures banks, whereas the National Credit Union Administration insures credit unions. If you have more than $250,000 to deposit, talk to the customer service department of the institution you've chosen about the many types of accounts you may utilize to expand your insurance options. For example, a checking account and a savings account both qualify for insurance up to $250,000. Are credit unions safer than banks? No. Bank and credit unions are both insured for up to $250,000 by the Federal Deposit Insurance Corporation, FDIC, or the National Credit Union Administration, NCUA. Account managers should be contacted if you have more than $250,000 to deposit in a bank or credit union. Bottom line, for both loans and deposits, credit unions are likely to give you lower cost services and better interest rate alternatives. Banks will almost certainly provide additional services and goods, as well as improved technology. You'll need to think about things like this when selecting which sort of institution would best suit your needs. That's it for today's video. Thanks for watching. See you in the next one.